Hello, everyone, and welcome to another Newry Bethel market update as we round out the year of 2023. What a year it's been. I'm Dave Menapace. I'm the president of the Five Star Co-host, a co-hosting and consulting company for our fellow owners in the Newry and Bethel markets. And I am joined here by Mr. Will Van Wickler.
How's it
Will,
going, everybody? Leading
up to you.
short-term rental agent and
Is
fellow
it
owner in the Newry market. So
is it number one in like New England?
number one in New England. Big
Tell me
stuff's
the
going on.
dude.
Just
I
a
love it.
little Newry and Bethel getting us there.
I love it. I love it. Well, we've done these before. Will started the short-term rental, the Sunday River short-term rental owners Facebook group, really good community. Lots of great questions get asked there. And so what we really wanted to do is just kind of do a market update, go through, some things that people ask there and really talk about what we're seeing on the sales side of real estate, and for me, talk about what I'm seeing on the operations and management side. So, well, why don't you kick us off? How was this year compared to last year?
It's crazy. Honestly, crazy is the only word I can use. Every year is so weird at this point, Dave. I'm sure you feel the same way. We had the COVID craziness, and we had the after COVID kind of weirdness of
Yeah,
interest rates doing their thing, and now it almost feels like we're kind of getting used to this weird real estate environment where interest rates maybe start with a 7 or an 8,
right.
and there's certainly less inventory. However, the savvy investors that are coming to me right now, they know the market is going to keep going up and the numbers still work. So,
Right.
what I want to talk about is the buyer profile that's actually coming to Newry and Bethel has changed. Before, it was maybe only local people that knew about the market. However, now it's on the map nationally as one of the most investable markets anywhere in the country. And that's because of what's going on in other markets with oversaturation issues or regulation. And the housing stock available here is much more affordable. Now, what I'll say is oversaturation is a big thing that's coming up right now. Everybody's concerned with the craziness in, Kissimmee, Florida, or other markets like that. We just simply do not have that problem here. I wish we had thousands of homes for me to sell. There is simply a max, and there is not enough inventory, and demand still outpaces supply. So on the sales side, we're seeing elevated prices where the average sales price is actually up 25% year over year for Newry and Bethel combined. And that's non-waterfront property, excluding land, which is insane, 25%. And we actually look at 2016. I love this stat. The average sales price was only $204,000. So you can see this market just continues to go up, and it will. I think a lot of these 1 million, 1.3 houses will be 2 million, 2.5 pretty soon. So it's one of those things you kind of have to jump in now. The payment makes sense. That's great. And we know the rental market's there. We're not really seeing this crazy multiple offer frenzy that we were seeing. There's inspections on every transaction, and buyers do not quite have the sense of urgency that they maybe once did in 2019, 2020 COVID. However, with the cost segregation boom that goes on at the end of the year, it was certainly hectic putting 20 properties under contract and closing them out so owners can get in their cost segregation this year. So the sales side, it's pretty steady. There's simply not enough inventory, which continues to be the conversation, and interest rates are what they are. So savvy owners, they're still looking for that 4 to 5 bedroom property with some sort of view in a good location in proximity to Sunday River, and new construction really is the big focus. So that's a little quick sales update.
No, I love it. And what I'll also say, two things in reflection of that, is I'd agree. I know I'm psyched to see that my house is about 30% more now than it was when I bought it a few years ago, at least. But the other thing is your strategy around really protecting the buyer. So, what do I mean by that? Well, I know from at least talking with several of my clients who have worked with you, there was probably at least 3 or 4 of them that got to recognize 100K back in closing or more, right? And that is money that can go right into your budget for design and furnishing, which we're going to talk about in a little bit. But so even though these numbers might seem big, right? A million, 1,000,001, 1,000,002, it all comes down to numbers, and how you get that deal negotiated and working with you is a massive piece of that. It's a massive, massive piece of that win. So I just want people to hear that and recognize that price is only one piece of the whole offer and only one piece of the whole investment. There's a lot more that goes into that.
I appreciate that. And I think the saying, the path is in the math, I use that like every single day. The numbers have to add up because for every great deal, there's about 50 that are duds. And it is certainly frustrating. Somebody just texted me earlier, said, Merry Christmas. Where the heck are the deals? And I tell them, I'm not going to send you a bad deal because right now, unfortunately, there's a lot of bad deals out on the market, a lot of things that
Right.
might look good on paper that you really dig into them and you're actually like, this makes no sense. And they're probably selling for a reason. So the path is in the math. We can look at the numbers and actually find out what the heck is going on. And price is only one factor of it, right? So there's some interesting stuff going on right now. And it'll be interesting to see what happens next year, headed into an election year. Historically, interest rates drop. So that's the
Well,
scoop.
totally. And what I'll say is that there's good and bad deals in the 500 to 800 range. There's good and bad deals at the 800 to 1.2, and there's good and bad deals at the 1.2 to 2 million mark. Just because something is inexpensive doesn't mean that it should be more attractive or any less risky, you know? So I think there's really important nuances to that. And when we talk about the different, not different markets, but I'll call them the different areas within the market. You know, I think a year ago when we started really dissecting and putting a system to this, the best deals at least I felt were always a new. However, I mean, you and me both, one special thing about that third market, we call it Woodstock in Bryant Pond. I would argue that that market, yes, it's a 20-minute drive to Sunday River. I don't know any other areas that have consistently as good both mountain and water views from the same porch. And
It's
a lot
insane.
of I mean, it's completely insane. And so it's really made me rethink I know a lot of really amazing operators are starting to buy in Woodstock, which would have seemed crazy a few years ago. But all we have to do is look at what the guests are looking to book. They want dynamite views. That is like the number one thing people are looking at. And they really want that really nice, either clean and crisp home or chalet style home that's still clean and crisp with updated furnishings. And so I'm really excited to see what happens in that town over the next year, just because I think guests are starting to pick up on it, right? Because all you have to do is start scrolling through Airbnb. You see those hero photos that have water and mountains, guests get drawn to that. That's actually what pulls people out of just only Newry or only Bethel and brings them into those other markets. So I'm really excited to see how that develops.
It'll be interesting because there's a lot of
Yeah.
new construction opportunities there and the price point is right. So I think a lot of operators are going to start looking at those markets and a lot of consumers with money being tighter.
Yeah.
I think they'll opt for that because what's another couple minutes in the card? There are properties in West Bethel or, off East Bethel Road that are 25 minutes away.
Yeah.
And Woodstock, you jump right on and you're at the mountain in 18 minutes. So
Totally.
very
Totally.
interesting sub-market that we'll call it that I think a lot of people are overlooking.
Oh, I totally agree. So on the management, and operations front, there's no secret. This was one of the most challenging, I think, years if you were launching an Airbnb that there's been in at least the last 3 or 4 years. What I learned, and actually, real quick, one thing I want to follow up. You made some really good points about like Kissimmee and the Smokies, some oversaturation there. To put some real numbers to that, I think the last stat that I saw is there was something like 550 short-term rentals total between Newry, Bethel, and Woodstock. And that number actually goes down as you go into peak season because a lot of people don't like renting out their house in the winter. They just want to do it in the off season to offset expenses. So as you go into winter, that actually drops to something around 480. And then some cool stats for where those other markets, you're looking at 5,000, 10,000. Kissimmee is over 40,000. So
I just looked at Searville, Tennessee, 12,000 active rentals.
And that's not even including Gatlinburg or Pigeon Forge.
Crazy.
So that whole market probably has close to 30 or 40,000 at least. So we're in the hundreds, not even 1,000. So just some interesting stats there to really keep things in perspective, Um, there's houses being built up in Maine, maybe a few dozen homes have been built up in that market, not hundreds. So it's always good to sort of level set and have perspective on that. Um, some observations of mine over the last year is that, and some things for people to remember is that depending on when you're going to be launching your property, that's going to have a massive impact on what your startup budget is going to be and what you need to do to your house off the bat. We did have some houses this year that didn't kind of go all the way with the design and with the amenities and tried to get up and launched and running. And while some money was made, there's in some instances, in my opinion, thousands of dollars left on the table in revenue. Um, those would be houses that were launched sort of in the summer, early fall, which is always historically a slower time, not necessarily the summer, but definitely kind of like that late fall as you hit November. And I think a lot of people have bought recently and they're kind of looking at their November and December calendars and saying, what the heck? This isn't what I expected. So just to level set, November into like December until you get to Christmas is generally a fairly slow time of year, just like the month of May and June. You're in between holidays, foliage is done, the slopes aren't open yet. And in a year like this, where the economy is really slow and money's tight, people are thinking about buying presents for Christmas. They're not, they don't have the disposable income that they've had before. So the way you win in that market is by totally annihilating it on the design and the furnishings and the amenities and having the best property that you possibly can. And there are houses that crushed it this fall into this winter. One of my clients, he launched, I think the first day that he launched right before Thanksgiving, all of December is booked up. I think like 20K in revenue. It's a 5-bedroom house, brand new 5-bedroom house, and he murdered it, right? So not every house is doing that, but it's you get out of this what you put into it. And so, it is not the same industry that we saw over the last 2 years. You have to put your best foot forward. If you can't afford that and you can't work something out when you're purchasing it to help purchasing the home to help offset that, it might not be the right time to buy. But the good news is for those who have bought and maybe their house isn't where they want it to be and they're still working through it, you're coming up on Christmas. Historically, from pretty much right now, like, or I'd say middle of December, December 15th through New Year's, the most bookings for the winter come in during that time. They do. And the other piece of that is this is a year we're seeing a lot more last minute bookings. So you want to make sure that you're enticing that last minute booking so they pick you and not somebody else. What we've started to do, if we have open like weekends and weekdays, is we're taking that weekday pricing and we're putting it down. If you use Price Labs, we're putting it down closer to the 25th percentile in the pricing. So that way, a single family home, and I should say this applies to 5 bedrooms and up, a single family can still rent it and afford it. The weekend pricing, we're still keeping really high. Generally, a few families might jump in and go on that vacation, or you can slowly walk it back as the week goes through. So there are different pricing strategies available to you to pull people in when you're in these slower times a year. Likely not going to be something you have to worry about during the winter. But one thing I'd caution everybody, especially during the winter in a year like this, if you want to hold higher pricing, make sure at least your weekdays are set to a 2-night minimum. And then as you get into the season itself, you have to check with your cleaner and make sure they can accommodate this. If you have any singular open nights, don't be scared to jack up that pricing and do a 1-night minimum. Again, check with your cleaner to make sure they can actually accommodate this turnaround. But it's not terribly uncommon for folks to want to go skiing, stay the night, and then ski the next day. So there's a ton of opportunities in that to really be making up for any lost opportunities that might have happened in the fall and early winter.
What do you think the biggest struggle operators are having right now that they might not have had last year?
I think for those that are owners and they're managing their own properties, I think it's either pocketing any proceeds from last year and not holding them sort of like in an oh crap account. I like one thing we are always looking at. I think we invest in our properties at least twice a year. At least twice a year, we put several grand into our properties. I have one in Cape Cod, one in Bethel, and that has always served us well to continue to like up our game and what we're doing. Had we just taken revenue and never done that, I think we'd really be struggling right now, because I think in the mountain markets, it's a little different from a beach market. In the mountain markets, people want to see new upgrades, new updates. Otherwise, what's stopping them from going and checking out a different house, right? So I think continuing to push that. The other thing is, I see a lot of operators that get just one round of photos whenever they launch, and they think it's sort of a set it and forget it. I continue to have the photographer come to our house at least 3 times a year, and actually a lot more. I feel like, no joke, I had the photographer just stay at my house a couple of weeks ago. But we're always getting new photos, with the foliage, with the snow, and then in the spring. And because twice a year we're always making updates to the properties, I want to get that captured. You want to get those updates done. You want to show them to the guests, whether it's adding an Xbox or PlayStation or a new kitchen table or a sauna or an upgraded hot tub or dartboard or new carpets, new color, new decor. It's great to have that, but then you got to capture it and show it. And I just think that at this point, I just add photography as like a budgeted monthly expense. That's all. And it's pretty, I think we can all agree, really good photography is not terribly expensive. Maybe $1,000 a year if you're doing it right.
Yeah, and that's what people look at, right? So I think the challenge that I'm seeing on the acquisition side is people aren't budgeting for the time that it takes to set up. They're not adequately budgeting, and they want a turnkey property. And then they're not budgeting for things that they really should be, like software, marketing, photography, pest
Yeah,
control. It's really interesting that it's almost like the investment mindset has been taken out of this industry because of the COVID boom. It's still investment real estate. And I'm not sure about you, but every time a tenant moves out of a long-term rental of mine, got to go in and paint. I've got to update some things. Wear and tear happens. And the properties that are succeeding, they look fresh, they're new, they're investing in it, and their return is just going to yield them the results that they were
totally.
hoping for.
Totally. To that point, my house, which we've been operating for almost 2 years now, I had a big like wraparound sectional couch that was brand new. We brand new when we bought the house. We just tossed it out. We just replaced all the furniture in that living room. It's been about 2 years. You know what
Yep.
I mean? So what I would tell people is an easy way to make these decisions or to know what to upgrade or what not to is stay at your house every now and then and increase your standards for your own house. If you think something's kind of annoying or a little uncomfortable or notice it's a little bit broken, guess what? Every single guest is going to notice that too. Right. So I think if you want to make money and pull in these bookings, like these are really, really important aspects. I think we've already, thankfully hammered home that everyone should be having a hot tub at their house. I think, but think about if you're a guest and you're spending what you're asking, how do you feel? What would you want? And then just go on to Airbnb and VRBO and think about, for that same price, what could somebody get? What could somebody rent that's better than mine? And
For
just ask
me,
yourself, you want to
staying at my
compete?
place, I didn't have any place to plug in my phone. I spent $50. I bought 5 USB hubs right after that. And it's just small
Yeah,
things like that that go into the experience of like, oh my God, I'd love to be able to plug my phone in right next to the bed, right?
totally.
Small
Totally.
things. It doesn't have to be expensive, but it's about creating that experience for people. And an interesting statistic is, or fact, Hilton hotels, every single stay they have, 8% goes out of their net and it goes into a separate account. And that 8% is to replace furniture. So maybe it should be more for short-term rental, maybe it's less, but just an interesting stat that the major hotel operators they replace furniture all the time.
Yeah, that's really interesting. I and I think a lot of us forget that, right? Like a lot of us forget to do that. And if you're an owner
Mm.
who has a property manager, like you should still be doing that too. You know what I mean? For example, that couch that I replaced, even though we use safely and we literally get hundreds of dollars of things, thousands in most cases covered like per property for anything that breaks, those types of insurances do not account for wear and tear. And what I'm seeing, again, general observation, when money gets tight, and bookings are down, I think that a lot of people, rather than investing and going to try and get more revenue, they contract, which I understand. I can sympathize with that. They contract and work to save money, but it can end up cutting corners, lessening the guest experience, starting to get bad reviews, becomes an industry you as an owner don't like. You got to be careful. Like what you put out is what you're going to end up getting out of this thing. So, and that's just more of like a general statement across the industry that I'm seeing. And it's starting to become a clear divide on the properties that are really, really successful right now, and then those that are struggling. So it's definitely been interesting. It's been a really interesting observation. It's been a really, really interesting year. I'm excited for next year though. I think that as rates start to drop, at least as the Fed says that they're going to do, I do think in general the spending habits of our guests are going to loosen a little bit, and they're going to feel more comfortable going on vacation. I just think this was a bit of a recalibration here.
And I love that word, Sean Panosian, the number one loan officer in the country. He uses the word recalibration in his market updates. And I love that because we needed it. We had a pretty strong market and then a crazy, unhealthy market. And then it's been a tough year in real
Yeah.
estate. Units are down. I know a lot of agents are struggling. Short-term rental offers, a lot of them are struggling. I'm getting a lot of 1031 exchange calls from the Smoky Mountains. We need to level up, recalibrate, and set ourselves up for success because once the floodgates open up, the strong operators that took market share over in a shifting market are just going to be miles ahead of the competition. So
Yeah,
now's the time to really level up, get better, and keep your head down.
I love it. Well, my friend, I think that's a good one for us to end on. Any last words?
Yeah, get a couple trash cans. Bears exist in Western Maine. Make
Yeah,
sure you have a plow guy. Can't think of anything. Get your furnace serviced. Yeah,
yeah, all the normal stuff. Well,
right. Rapid fire.
I love it. I love it. Well, again, my name is Dave Menapace. Everyone, if anyone wants to reach out or talk or get some advice, my email is dave at 5strcohost.com. Our website's 5strcohost.com as well. And Will, you can also shoot me a DM, Dave Menapace. Will, how can folks reach out to you?
Yeah, willsellsmaine.com, Facebook, Instagram. Find us there. We are always happy to help and contribute to this great community.
Love it. Thanks, man. Have a good one.
Too.